Cool. So as you guys know, yeah, we are wrapping this thing up now. Um, but what I must say before we actually get going is congratulations. I'm thoroughly impressed, thoroughly proud of you guys. You did really, really well for test two. So yeah, what I can say is that just don't take your foot off the gas. Just keep practicing, and I'm sure you guys will get through the exam as well. So yeah, let's just finish off these last two units that we have. We're going to wrap up Unit 7 today as well. So yeah, fun times, fun times, fun times. Where do I want to do this? Let me do it over here. Okay. So yeah, if you can open up your textbooks, we're going to first wrap up Unit 7, and then we will jump into let's do this whole thing. Uh, Alright, this is a problem. Okay, Etienne, I'm going to need you to confirm that you can see my screen. I just want to make sure that I'm sharing the right screen for the video here, for the recording. Um, okay, let's put it on screen 2 then. Cool. Let's put this there. All right, awesome. Okay. All right. So where I want us to start is I want us to start with activity 7.8. All right, in our textbook. This is the last thing. Well, not the last thing, but remember what we did in Unit 7 was Unit 7 is all about the individual debtors and the individual creditors, right? No, not 7.8. Should then probably be 7.9. Yes, should be 7.9. Okay, all right. So yeah, as I was saying, um, Unit 7 is all about individual debtors and individual creditors. Okay? And we did play around with those before we obviously started doing revision for our test, right? But one thing that we didn't touch on is that over and above doing each individual credit and each individual debtor, we then also have a list of debtors and a list of creditors. In this question, we only focus on your individual debtors, but the principle is exactly the same for your individual creditors. Does that make sense? So let's get into it and see what's going on over there. All right, so let's read the question there. In my textbook, it's 220, so you guys can do 231. All right, so there under the required, it says, the bank statement at the month end reveals the following. The check received from A. Milan was returned by the bank marked RD on 30 April 2009. This transaction was not reported. Okay? K. Sydney had deposited the amount owing directly in the bank account on 30 April 2009. It's required draft the debtors ledger of Newland traders, okay, and then draft the debtors list from Newland traders as at 30 April, okay, 2009. Okay. So the two things that they want us to do is do the debtors ledger for Newland traders, okay, and this is done, okay. It's exactly what we did in 7.4 and 7.5, okay. And then they want us to do the debtors list, okay. So let's see what's happening on the top there. The Newland traders uses a periodic indicator. The business is a registered vendor, and it is the policy of the business buy only from vendors who are able to provide tax invoices. April 2009 is the business's third month of trading. Okay? And the following list of balances appeared in the books on 31 March 2009. Okay? So I think I should switch off the light. I think that will see all that clear. That's better. Let's zoom in. All right. Okay. All right. I hope you can see that. Okay. So this is basically what you already have in your textbooks, right? It's just the list of balances for each debtor on at 31 March 2009. Now, they asked us to do the debtors ledger for the end of April, right? So what is the purpose of these balances? Somebody tell me, why did they give us these balances? What are we going to use these balances for? Uh-huh. 100%. Exactly. These are the opening balances for the month of April. Okay, those are your opening balances. Okay, for each of those individual debtors. Okay, so let's scroll down, and we're really going to just talk our way through this exercise. We're not actually going to actively do it. Okay, because I just want to get you guys to understand this. It's very easy, it's very straightforward. Okay, but then I just want you to obviously understand what's going on. So here, what I've done is we're now looking at A. Milan, okay? And hey, I probably should have just left this in there, but I thought we would have had time to actually go through this. But remember, because we were revising, as opposed to finishing off Unit 7, so we kind of used the sessions we would have used to do this together. So I'm just going to talk our way through it, all right? So here, like you highlighted, here's your opening balance, okay, that we had for March. And then obviously we continue to have our balance, and you can see it's changing as we go down, okay? And then obviously here we would have entered in all our transactions, okay? But at the end of the day, this is the total that we would have come up with, all right? And the exercises that we have done in this unit, right, will equip you to answer all of these, okay? There's nothing brand new, all right? So there you can now see we've got the balance for A Milan. We move on, we've got D London. His balance is 0. He's paid off everything he's owed us, in other words, okay? All right. And then obviously we have R. I don't know how to pronounce that word. I'm not even going to try. And then we have K Sydney. All right. Balance in blue as well. All right. So those two owe us nothing. Uh-huh. And then finally we have L Flory there. So now our job is to then take these balances, those amounts, okay, and then we're supposed to plug them in here. Because remember, the first bit of this question, what are we supposed to do? Sorry, excuse me. What are we supposed to do with the first part of this question is to do the debtors ledger, all right, which we've done up top there. The second bit is to do the debtors list. Now the debtors list is simple. It's literally just a list of all of your debtors and what they actually owe us, okay? So literally here, all you're going to then do is you're going to say, okay, what was the balance over here? And I'm struggling to do this because it's not displaying on my screen, so I'm having to look at the projector and actually copy from there. Okay. So plug that in there. And here I believe it was 0. Okay, it was 0. Let's see how much was owed over here. That was also 0. Okay, that makes my life a bit easier. And then this first debtor, so this amount right here, I think it's 29,000. Copy. And this was 0. Okay. So if you add up all of those, all right, if you add up all these amounts, you're going to see that you arrive at this 78,000. Okay. So this is now the total of what is due to us from all our debtors. Does that make sense? Okay. Now, I spoke about this when we actually went through the slides, right? We do a debtors reconciliation, all right? And this is how we do the debtors reconciliation. And you guys will see this when we do accounting 1B, all right? Assuming we do it together in the very first unit, actually, all right? This 78,000, all right, needs to equal what amount for us to know that we have recorded our debtors correctly and everything is balancing in relation to justice. Which account needs to have that same balance? Somebody take a guess. Which account needs to have that exact same balance? For us to know that we have recorded everything pertaining to our debtors correctly. 100%. Okay? So your balance brought down and your balance carried down needs to equal that 78,679.97. And then you know that you have reconciled your debit control. Yes. Yes, that would be good policy because then if we want to see who owes us, right, then we can obviously just look at it. And then we know that we don't need to bother, for example, cases because we know we don't owe us. So yes, we need to do that. All right, awesome stuff. Okay, all right, so that is your exercise 7.9. Okay, as you can see, there's nothing else there for us. Okay. So usually they don't ask you to do the debtors list. Usually they focus on you actually doing the individual debtors or the individual creditors. Guys, this question always comes in your exam. Why? Because we haven't asked it in your assignment, we haven't asked it in your test. So that's the only point where we can actually test. Do you understand this subject matter, this topic? Okay. Now the beautiful thing is you'll find that usually it comes for 20 marks, 25 marks, or 30 marks. All right. And I'm sure you guys now know how easy it is because literally, all right, depending on whether you're doing the debtor or the creditor, all you are saying is, okay, what is the opening balance for this respective debtor? And then you ask yourself, whatever transaction that transpires between ourselves and this debtor, is it going to increase their account? Is it going to increase their account? You know we're going to debit it, all right? And then obviously add that balance to the total. If it's going to decrease, then we know that we're just going to credit that amount, all right? And then that means we reduce the balance that we had prior to the transaction, all right? Very, very, very simple. And then obviously, document number, we know that we're copying and pasting the document number that we had in the transaction. Can you see that? Then this is where you may need to apply yourself a bit, all right? To say, okay, since he was buying from us, okay, what journal would have been impacted? Okay, we know that whenever a debtor buys on credit, all right, or a customer buys on credit, debtor's journal is affected. Whenever a debtor returns goods to us, okay, or asks for a rebate, all right, there's a return, or we've overcharged them, all right, it's going to affect your debtor's allowance journal, all right? Pretty straightforward, okay? When they pay us, all right, when we receive money from them, it's going to affect your cash receipts journal, okay? So that shouldn't give you any problems, okay? So just practice it, because I'm telling you, it's coming, okay? Hopefully I haven't let you down yet in terms of what is coming in the test and what isn't coming. So take note of that. But anyway, let's progress. Let's proceed to the next exercise that I want us to do. The next one that I want us to do is 7.1. Okay, 7.1, and this is just a good test of your application of understanding that and also what is transpiring, how that impacts our individual data. Okay, so this one we're going to do together. But now this problem that I'm having of having to look at the screen, the problem. Okay. So let's see how we can work this. You're gonna have to forgive me. I'm gonna have to have my back towards you. Really do this. Alright. I'm gonna just be showing you the answers the whole day today. Okay. Right. So let's see what's going on there in 7.1. In my textbook, it's 209, 213 in your textbook. Okay. So let's see what's going on there. It says, refer back to example 7.1. The VAT Act states that input VAT may be claimed on credit losses. The Act also clearly states that interest is a VAT-exempt supply. In other words, falls under the VAT-exempt category. Okay? Then, keeping the above in mind, explain how you think the general journal entry would have been passed, all right, by Hawks' Enterprises to record the credit losses on 31 August 2009. Show your working. Okay, right. So let me tell you about what's happening in example 7.1. All right. So we have this data. His name is Mr. Suleiman. All right. Now, This data, we've obviously been transacting with him. You can see the table of these debtors ledger right above the question 7.1, right? We've been transacting with him. All right, now if you look there on the 24th of August, you can see journal voucher JB18, interest in brackets, all right? And there you can see 280.18 cents. So basically what's happening there is we're charging him interest, all right, because he hasn't paid us on time, all right? There's a portion of whatever he's owed us that hasn't been paid on time, so we're charging him interest. Then we go on further. We see there that he has a receipt, RC441, okay, so he's paying us some money, all right? And then his balance then becomes 18,511.29 cents. Okay, cool. Right. And then on 21 August, guess what happened? We also realized, okay, well, let me actually start over in terms of 21 August. We received a letter from Mr. Solomon III, okay? And in the letter, it informs us that he's become insolvent and that he's going to write us a check, all right? Or we receive a check alongside that letter, constituting a dividend of 35 cents in the rand from his insolvency case. So in other words, he's going to pay out, because you know a rand is 100 cents, right? So if we're only getting 35 cents on the rand, sometimes we say on the rand, sometimes we say in the rand, same thing, okay? It means that he's paying us 35% of what is due to us. Does that make sense? So now you then have to calculate what is 35% of what is due to us. So you're going to say, what is 35% of the 28,478 rand 91 cents? And that's how we came to the amount of that 9,961. Does that make sense? Okay. Now, once you've done that, you now know that the balance, that being the 18,511, is what is outstanding and what he is not going to pay us back. Because he has become what? Insolvent, right? Okay. So what do we then do in this scenario? When we know that somebody is not going to pay us back, we then have to write that off as bad debt or as a credit loss, okay? It's two different terms, but they're the exact same thing. So you guys can write it off either one, bad debt or credit losses will take them off. Awesome stuff. Now, that's what they did there in the second transaction complicated. All right, and this takes place in this, they will serve. Okay, as you can see. All right. Then, now going back to question 7.1. All right, because it wants us to then record this transaction in the general journal. Okay, that's what it wants us to do. So then, as always, we ask ourselves the question: which accounts are affected by this credit loss in this bad debt? Which accounts are affected? What are we going to debit and what are we going to credit? Think about it. This guy is a debtor. He owed us. We're now writing off what he owed us. So yes, there's a control. You said something that we know. Bank. Well, here we've already recorded this dispute, so we're now interested in what we're writing off. So bank doesn't necessarily go through the not credit control. Debtor control, yes, so it's going to be the debtor. So what else is going to be affected? To which account did you say we're going to write this off to? What account did you use? Huh? Bad debt, okay, so bad debt is going to be affected, debtor control is going to be affected. What else is going to be affected? One more. There you go. All right. Let's go ahead and just go over that. It's one of them. I know it's one of them. Okay, well, let's think about this. Now, to decide on which that is going to be affected, you need to ask ourselves a question. When we initially sold to him, which VAT was affected? Output VAT was affected. So basically, we're saying to SARS, we just sold Mr. Solomon this, right? So we owe you output VAT. And now we're saying, hey, hold up, this guy actually he hasn't paid, he's not going to pay. So we now need to reverse the output VAT. How do we do that? By input VAT. So input VAT is the one that we actually want to record. Okay. So my advice to you is whenever you have these type of transactions, I'm getting my pieces right here, is that then you record the accounts that are affected. You debit and you credit them, and then you go on to work out the amounts that you're going to debit and credit. Okay. So we know input VAT is an asset, and we know we're obviously then going to debit input VAT. Okay. And then we know, we said earlier that we are also going to use bad debts or credit losses. Okay. So I'm actually just going to put both, just so that you guys know that you can use either one. Okay. All right. And then finally, we know that debtors control is going down, right? Because we're writing this off. We're saying, hey, we're never going to get this money back. So then we write, we're gonna credit that. Debtors control. Right. Now we need to work out what amounts are we going to put in these respective accounts. Okay. So first things first, we have to look. We see, okay, he owes us 18,511. Okay, so that amount is what we're writing off. All right, 29 cents. Yes, in the debtors control. Okay, that's how much our debtors control needs to decrease by. Okay, so 18,511, 29. Let me just make that a bit wider. Okay. All right. All right. And that's the narration that you'd put if they asked for a narration. All right. Write off as irrecoverable. All right. Or credit losses. Or as long as I get what you know in this. Okay. Okay. Cool. So we've done that. Now we need to work out how much are we going to claim back from SARS as input back. Now, they mentioned something very interesting at the beginning of the question. They talked about how interest is exempt. Okay. If we hadn't charged this guy interest immediately, we could have just said, what portion of this 18,000 is that? All right. So we basically would have said 15 divided by 115, because we know that this amount is obviously inclusive of that. Okay. If it's in the debtors ledger, we know that all amounts there in the debtors ledger are inclusive of that. Okay. So since we know there's an interest portion in this 18,000, what we then need to do is to say, okay, we need to remove that interest portion. So we say 18,511.29 cents minus. Now we go back to the debtors ledger and we say, how much did we charge them again for interest? It was 218 cents. Okay. So minus that 280, 18 cents. And what do we get? Somebody tell me. Should be still 18,000 something. 18,000, about 300 and something? Oh no, 200 and something. Anybody have the number for us? On my 11. All right. right, thank you so much. All right, so now we have that, okay? So now we have what he owed us, exclusive of the interest that we charged him. Now we can then say, what is the VAT portion of this? So then we say, okay, times 15, what we want, the VAT amount, divided by 115, what do we get? $2,377.97. Okay, awesome. Thank you for that. Okay. And that now we can put into input VAT. Okay. Now, how much are we going to put into your bad debt or your credit losses? It's literally going to be the difference between the two. Okay? It's going to be the difference between the two. So we're then going to say this 18,511, okay, minus the 2,300 and something. Okay, so let me actually do that in brackets over here. Okay, and I'm just going to put brackets there. I don't want to make it messy. Let's do that. Okay, and so what are we debiting here? What's the total that we're not debiting here? I think I recall 16,000 something. Uh-huh. 3.2. Okay, awesome stuff. Okay. Now, one thing that I just need to throw in there is that when it comes to this question, right? And you see we said 15 divided by 115 times the 18,431. We did not say, okay, maybe we could actually start with credit losses and then just say 100 divided by 115. Okay, we can't do it that way. Because with the credit losses or the bad debt, we can actually include that interest portion. Does that make sense? So if we were going to say 100 divided by 115, right, we would have gotten slightly less than this 16,000, all right? And then what we would have needed to do is then add back the interest. Does that make sense? Okay, so this would have been the easiest way to do it, to just say, okay, what's the VAT portion? Cool, we've got that. Then we subtract the 18,000 from that. So this was a good question just to kind of test, one, your understanding that interest is exempt, and then two, getting those right amounts mathematically. It was a good test. But yeah, I haven't really seen them do this type of question, but obviously just so that you don't feel like, whoa, if this does pop up or something to that effect, you obviously know how to handle it. Okay, so that's 7.1. I don't know if you guys have any questions in relation to this before we move on. No questions. Okay, all right. So final thing that I want us to do, and I'll give you guys a break after that, is question 7.8. 7.8. This is the last exercise for your for our unit 7, and then we'll get into the theory of unit 8. That will be it for today. Okay. All right. So let's zoom up a little bit here. Okay. Let's see what's going on in 7.8. Look for another short exercise. All right. In 7.8, they are saying what? What is required? Let's discuss the concept of set off and illustrate how the accounting entry should be done. Sometimes it's possible for a business to have a debtor to which it is a debtor in their own capacity. Okay? In this scenario, it is permissible to set off your debtor's account against the amount that you owe to the business in your creditor's ledger or money. That was quite a mouthful. You guys tell me, what the hell is actually going on? What are they trying to communicate to us?
So I think that if you as a business open
looking at how much you owe each other. That's all that they're saying. In fact, in the wording, I would have preferred if they actually said, you may have a debtor who at the same time is also a creditor. I think that would have been a better way of actually saying, rather than saying in their own capacity, you owe that. Making that it is confusing. But that's not going to put it on side. Okay. I have no idea where my phone is. Okay. Hopefully it doesn't ring again. Okay. Right. So let's continue. So here they're saying discuss the concept, and you basically just hit the nail on the head. We owe someone, they owe us. So instead of us actually taking money out of our bank account and paying them, and them taking money out of their bank account and paying us, you can just say, hey, why don't we just set the thing off, cancel out what I owe you by looking at the amounts that we owe each other. So that's the illustration that I have for you on the board here. We have a debtor, Peter Pan, okay, who's also a creditor, someone we owe. All right, so you can see the creditor Peter Pan as well. So we owe him 1,000. Oh, sorry. He owes us 1,000 as a debtor. We owe him 850. So the simple way of handling this is saying, okay, cool. Instead of him owing us 1,000, what we're then going to just do is we're going to open up the debtor's control. Here we're going to write creditor. All right, and again we're just going to put the Peter Pan. Okay. All right, and here we're then going to write, and this would happen in the general journal, GJ. Okay, and here we're going to write 850. Okay, so he still owes us because what we owed him was less than what he owed us. Does that make sense? So he still owes us, but now we're just going to obviously then balance the account. All right, so here we're going to put 1,000. And here we're going to put 1,000 because that's the bigger side. But then here we're going to put balance. C/D. Okay. And this is going to be 250. And then obviously our balance brought down is also going to be 250 as well. This is obviously going to be your 31. Didn't need to do this, but actually let me leave it out to waste of time. Okay, anyway, you get the point. Then we obviously also need to go to his creditor account and do the same thing. Okay, so since yes, my goodness, yes, you're actually 100% right. It should be 150. Thank you for that correction. This is evidence that night's rest. So don't be like, sir. Have a good night's rest before your test or exam. Okay. All right. Thank you for that. Then we do the same thing now in the creditors. Okay. And you see, this is obviously, go back to the debtors for a second. Obviously, decreasing his account. So that's why we credit it. Does that make sense? Okay. I shouldn't be saying that because I think by now you guys know that. But oh well, just for control. Okay. Then obviously, because we credited in that account, here we're going to debit. That's a double entry taking place. All right. But again, if you really think about it, we could have started here and we would have done debit because again, we're also reducing our creditor. And we know that our creditor's account decreases on the debit side. Okay, so here we say debtor, and then again we say beta and okay. Again, this takes place in a general journal, and here actually you could put 1. Okay, GJ1 because this is January, first month of the year. Okay, you just want to impress your marker. Okay, and then obviously here we're putting 850. Okay, we're not putting the whole 1,000, just the 850 because we're bringing this account to 0. So basically, we don't owe Peter Pan anything, but he owes us 150. Does that make sense? Okay, and that's the whole setting off thing in the home. Are there any questions? No questions? Everybody happy? Right, guys? So some of you came in a bit later, but I just want to say well done on the test. Currently in test. Okay? Usually test 2, test 2. So usually let us test 1 and test 2. So usually this test does not go that long. Well done to you guys. Keep it up, keep it up. I think a lot of you are definitely going to I don't know them all from you today, but I have submitted them. The specialty say and everything that comes yeah, the I thought already submitted the answer. I think yes, but I mean, if you guys have done the useful or the icon that gave online, you definitely will be made. Because I'm already looking at it. If you actually do that. So, yeah, we should go. All right, guys, so let's take that break, and then we will proceed after the break to jump into Unit 9.